Hi, good morning. My name is Kaysian Gordon from Casey Gordon Financial Planning. And this morning, it's still April, so I wanted to talk to you about taxes. Now, taxes is often a sensitive subject for many people. Either you're looking forward to a refund or you owe, but we never can get it just right. If you're getting too large of a refund, it means that your withholding on your paychecks is likely not correct. Because the government, you're basically giving the government an interest-free loan where they take it out of your paycheck, you file your taxes, they kind of it figures out exactly what you owe, and then it turns out you've paid in too much to the system, and so now they give you back a check in the form of a refund. Again, that's an interest-free loan to the government. On the flip side of that is you have not paid in enough into the system and you are owing. And it's never a fun surprise when you file your taxes and you have this large tax bill that you're wondering, how am I going to pay for this? That means your withholding was not correct. If you're making estimated quarterly payments, it means that you are not sending in enough on a quarterly basis. And some of the things that you can consider doing is paying attention to your income throughout the course of the year and not just waiting until it's time to file. Am I making more than I thought I was going to be making? Did I make more than the previous year and what my tax bill was supposed to be? Are there any situations that I can reduce my potentially reduce my tax bill? Can I contribute more to a retirement plan that's going to give me a deduction today, and allow my investments to potentially grow over time while reducing the tax bill today? Of course, that has its benefits. It also has its disadvantages depending on where you're looking and how you're looking. Um, are there other things that are available to you that you can get a current deduction that will allow you to put away or shield money from taxes today, thus reducing your tax bill? However, understand the drawbacks because typically if there's a positive on one side, there's going to be some way that it's going to be even out over time. So it's just understanding where you are and what changes that you need to make. And again, um, don't wait until after the end of the tax year. So typically for most people, it's the calendar year. So don't wait until then to try to figure out what your tax bill is going to be. It is helpful to do tax planning throughout the year, which I help clients to take a look at what planning opportunities there are as they're looking at how much they've made, and where they could potentially do things to offset a potential tax bill that's going to be coming. Again, my name is Casey Gordon from Casey Gordon Financial Planning, and I look forward to speaking with you in the next video. And do not hesitate to reach out if you have any questions or concerns. Thanks. Bye.